Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. The downfall continues, though it has stabilized somewhat from the levels that we've seen. But of course, it's not like a big recovery that we've seen. The Nifty is down around 400 points. We have the mid-caps, which are down 790 points. But do remember, Nifty mid-caps were down almost 1,000 points at a point in time. Now it's down around 800 points. So there is around a 200-point recovery. Banks continue to see cuts, and it's across the board that we are seeing cuts today.
That's right, and earnings continue. We had a bit of a break over the last three trading sessions, where last 3 days where you didn't see too many earnings come about, but today, once again, earnings are back. You can see the numbers of Excite on your screen, but quite a lot lined up on the show. Let's start off with the top headlines. Big slide on D Street as the event-heavy post-Diwali week gets underway. Nifty sees an over 400-point fall as the index breaks key levels. Selling seen across all key sectors. Mid-cap index slides over 1.5%.
Azad Engineering surges in trade after signing a 700 crore deal with Mitsubishi Heavy Industries. Management tells CNBC-TV18 revenue from new deal will start to reflect in 3 to 4 quarters.
Info Edge surges over 2% in trade after JobsSpeak's October data shows 10% rise in hiring activity on a year-on-year basis. IT hiring, on the other hand, is up over 6%.
Gold financiers are under pressure ahead of their Q2 FY25 earnings tomorrow. Manappuram corrects over 5.5%, while Muthoot falls 1.6%. Okay, all right, those are the top headlines. We'll discuss about mid-cap movers in greater detail in just a bit. But in terms of sectors, look at the Nifty energy space. It's down 3%, and every stock from that particular segment is seeing a lot of pressure, be it OMCs, be it ONGC. All India reports numbers tomorrow. We have GAIL's numbers, which are expected tomorrow. So the OMC pack also not doing so well. So it's a 3.3% cut there. And overall, if we look at the mid-cap basket, that continues to be under pressure. But again, it's a lot about earnings, and that continues to be the focus.
A lot about earnings. One earnings that we just discussed, Excite Industries, seems to be a bit of a miss. The stock now down almost 5%, just after declaring the results. Excite Industries is the one that we're discussing now near the day's lowest point. But Hormaz is standing by the wall. This is our special segment, Mid-Cap Movers. Hormaz, take us through all of the stocks that are making the moves in the broader end of the market.
Another kind of the start the bulls were expecting at the start of a very major week for the markets, but there are plenty of losers today within the broader market space, and we will start off with those names. Vodafone Idea and Hindustan Zinc among the top losers. Brigade as well, all of the real estate packs seeing some losses in today's session, and Manappuram too down to the lowest point of the day, 4.5% lower. Selling pressure also coming in a lot of PSU names, actually almost in every other sector, but PSUs too are the highlight today. BHCL, HPCL along with other OMCs are also selling off today. SAIL, IRFC ahead of results is down 3% in today's session. Some stocks that are not doing well on the back of volumes. Usually it's in the green. Today we've taken some of the losers on heavy volumes. PVR Inox at one point was down 8%. Now 6.5% lower. Star Health too, along with Aarti Industries, are declining on heavy volumes in today's trading session. And lastly, some stocks that are bucking the trend in today's session, and Gillette is one of them, continues to grow from strength to strength in a weak market. 10,500 now on Gillette, 5% higher, along with other names like Rainbow Medical, Fine Organic and V-Guard, who are holding on to some bit of gains in a weak market. Back to you guys.
Okay, so some green on the screen after that big cut that we're seeing on the benchmarks. By the way, suddenly, Office Space Solutions, that stock is also surged 7% higher. The company hasn't reported numbers as yet, but yes, there's a big surge that we're seeing on the stock as we speak. Office Space Solutions, a recent listing, and that has been doing well since the listing as well. But let's talk about Sharda Cropchem. Recently reported their Q2 numbers, saw recovery after quarters of pain. The company says its revenue surged 34%, while EBITDA rose 125% on a YOY basis. R.V. Bubna, the Chairman and Managing Director at the company, is joining us now. Mr. Bubna, good afternoon. Thank you so much for joining in. Well, seems like, as you've been pointing out in the last 2 quarters, that the worst is behind for the industry and the company as well. But for Q2, can you give us a sense of what the breakup was in terms of volumes and realization? The top line growth, if you can split it, because in Q1 it was 43% on a low base. How did it pan out in Q2?
Madam, your voice is very faint. I cannot hear you correctly. I told the other lady also. Can you increase the volume of your voice?
Yes. So, can you give us a sense of what the split was on the top line in terms of volumes and realizations this quarter?
Madam, the volume has grown about, 1 second.
Good afternoon, sir. Can you hear us now?
Can you hear?
Yeah, now I can hear. It's better.
Yeah. So, Sonal was just asked.
Please answer. Please answer.
So the revenue has gone up by 34%, gross profit 48%, EBITDA 125% compared to the same period last year.
Yes, sir. We had that number. We just wanted the split of the revenues in volumes and realizations.
Revenue, volume and realization. Just give me one moment.
Sure, sir. Okay, so just to apprise our viewers, the revenues this time around for the company has grown by 34%, EBITDA is up 125%, margins have improved to 10.9%, and profits have come in at 42 crore rupees, which compares with a loss of 27.6 crores. And in the half year as well, the company has done well. The revenues have grown by 28%. It's an EBITDA versus an EBITDA loss last year, and profits have come in at 70 crore rupees. Yes, Mr. Bubna, go ahead.
1 minute. See, the revenue has grown. The contribution is 20.6% by volume. Foreign exchange impact is -3%. And price and product mix has 10.2%. Overall, 33.8%.
Okay. You've mentioned that you expect further improvement in gross margins, and this is going to be led by price increases. Give us a sense of what kind of price increases you've taken and what is it that you expect to take, and is the market ready, to go ahead and pass on those price increases?
See, we are comparing these figures compared to the previous year. Previous year was a very unique and very low base point we are starting from. So the prices have gone down to the historical low levels. Now the supply and demand is matching, and the demand is increasing, and the prices are also showing an improvement. The process will be slow, but there will be an improvement of at least about 10% to 15% in the prices, if not more.
Okay, 10 to 15% improvement in pricing. You know, even your working capital days have improved from 158 days to 126 days. Are you expecting further improvement here? What is the channel inventory looking like currently?
Madam, we are improving. We are expecting a further improvement in the working capital days. The inventory is at a very comfortable level, and our process of purchasing is also going up.
So, after Q2, you've actually gone ahead and maintained your guidance as far as FY25 is concerned. A 15 to 18% revenue growth and a 15 to 18% EBITDA margin.
Yes.
At the end of H1, you're slightly below where you expect to be, or what is it that you're targeting? So what are the operating margin triggers that you're seeing in H2?
Operating margins we are seeing in the H2 is about, operating gross margins will be in the range of 30 to 32%.
Okay, and the EBITDA margins you've maintained at 15 to 18%. Is that accurate?
Yes, please. And I would say this is a very conservative estimate. We could go still further.
Okay, all right. So that is something that the street would want to know, whether second half is much better than what you are anticipating and what the street is expecting as well. Mr. Bubna, always a pleasure speaking with you, sir. Thank you so much for joining in today and giving us a sense of what's happening with the company and the industry as well. That's Sharda Cropchem. The stock is up 3% in a very weak market and has been doing well since the time results have come out as well. We'll slip into a short break. Up next, we'll connect with the management of Niva Bupa Health Insurance. It opens for subscription on November 7th. Stay tuned for that.
Well, some stocks in the broader end of the markets are bucking the trend as far as today's sell-off is concerned. One such stock is Voltas, now trading near the day's highest point. Voltas is doing quite well and bucking the trend. The other stock, that's seeing quite a bit of selling pressure emerge is actually Colgate-Palmolive, down almost 3.5%. And this particular stock, now trading near the day's lowest point. When you're talking about some of the other names, Exide Industries, it's now back to where it was. Saw quite a bit of a steep correction post the result announcement, but after that, the stock has seen a little bit of a recovery. Okay. Now, the other set of stocks that we are looking at is the two-wheeler names. Have a look at some of the names today. TVS Motors, this particular stock seeing quite a bit of a sell-off. Hero Motor, the company just announced its October monthly sales figures, but despite that, the entire pack, and it's the highest ever monthly sales that the company has actually delivered for a particular month, but the stock is down 5%. Bajaj Auto, despite the management sounding very confident in terms of the kind of sales that it has seen, Bajaj Auto too seeing quite a bit of a sell-off. Eicher Motors, as you can see on your screen, seeing quite a bit of a sell-off. The numbers of tube investments are just on your screen. EBITDA is down almost 13% on a year-on-year basis, and that particular stock down almost 1.5%, just post the numbers. But moving on to the primary market action, Niva Bupa Health Insurance opens for subscription on November 7th with the price band fixed between 70 to 74 rupees a share. Company is looking to raise 2,200 crore rupees, fresh issue of 800 crore rupees, and an offer for sale of 1,400 crore rupees. In fact, my colleague Yash Jain spoke to Krishnan Ramachandran, who is the MD and CEO, along with Vishwanath Mahindra, who is the CFO at Niva Bupa Health Insurance. Listen in.
Health insurance is a very, very exciting opportunity, and for the company to be here in its life stage is very, very exciting for all of us. Now, to answer your question, we in Niva Bupa, our purpose is to give every Indian the confidence to access the best healthcare. So obviously we want to invest in growth, and the objective of this capital raise, which is ahead of time, you're absolutely right, is to make sure that we are sufficiently funded, to take care of the next phase of our growth. That's why we are raising this capital ahead of time, and we want to make sure that we are in a position to weather any shocks like COVID. But broadly, the idea is to fund growth. Very, very excited about health insurance in India.
Okay, just to throw some numbers here, about 800 crore is what gets used towards solvency improvement. Where does that take the solvency to from the current 2.4 times? To very bluntly put this question to you, a lot of investors, analysts are also speaking about the fact that the fresh issue part of the IPO is only so that it does not look like the company is wanting to give an exit to a few of its existing investors. How would you respond to that?
So look, the two selling shareholders are True North, Fettletone and Bupa. Bupa is a very, very long-term shareholder. The only reason there is an offer for sale from their side is to accommodate FII headroom. There's been very healthy demand from the FIIs, and as you know, insurance has a 74% cap. So the only reason they are selling is to accommodate FII headroom. True North is a private equity fund. They are into the 5th year of their investment. So it is logical and natural that they look to taper down their investment in this vehicle. So that's the True North part of it. But let me repeat, 800 crores is for the company to fund growth in the very, very exciting health insurance opportunity.
Where does that take the solvency to?
It should be comfortably above 3 to start with, Yash.
As far as the IPO for Niva Bupa is concerned, that is coming at about 6.2 times price to book value. Your listed peer, that is Star Health Insurance, that company trades at about 4.7 times price to book value. And these are FY24 numbers. Now, if you compare business-wise, just to put the valuation in context, you're about 3 times smaller than Star when it comes to the net earned premium. Underwriting level, Star FY24 made a profit of 90 crore. You had a loss of about 410 crore rupees. You're 4 times smaller than Star when it comes to operating profit. PAT, you're 10 times smaller than Star. Combined ratio, Star was at 96.67%. You were at 98.79%. My simple question, keeping the financials in context and the size in context, is that why do you think Niva Bupa should get a valuation higher than Star Health Insurance, considering they're the market leader and much bigger than you on most of the counts?
Sure, Yash. So, Yash, we have to see all these metrics in the context of growth. So, if you see compare the growth rate of Star, you mentioned about Star or industry growth rate as such, and compare with us, you will see a stark difference. And let's say price to book value. This is important metric, but this is not the sole. Then you talked about combined ratio also. That also has implication of growth. When you are growing at faster rate, your expenses are higher. Right. So as your book matures, you get operating leverage and economies of scale. So we have been guided by our bankers So valuation which makes a fine balance between the value which is given to existing shareholders who are exiting as well as the value to incoming shareholders. So it's a very fine balance, and we have been guided to value which is fair to both the set of shareholders.
Okay. And Yash, if I might add one point to what Vishwanath said, in early January, Bupa came in and became the majority shareholder, as you're aware. And the price that they came in was 74 rupees. So close to 11 months out, we're holding the same price. So therefore, we believe that this price offers great value to any potential incoming investor who's looking to come into the company.
The base is smaller. Yeah. The growth is very strong in the last 3 years, as I was looking in the RHP as well. I have two questions for you here. One is, how soon do you see yourself reaching that annual net earned premium of about 10,000 crore rupees? Because you are right now at about 3,800 crore rupees. That was FY24. How soon do you see yourself reaching that annual net earned premium of 10,000 crore rupees? And second question, at what point do you see growth normalizing for yourself? What will be that normalized growth, considering the industry is growing at about 20 to 23 to 25%? What will be the normalized growth for you? At what point does it come in, premium-wise as well as time-wise?
What we believe is health insurance has huge potential. Industry is growing at a robust rate of high teens, which it will continue. And like Mr. Kishan talked about, our aim is to grow higher than industry and increase our market share.
In terms of the ingredients that go into growth, right, which is making great products for customers, and our products are market-leading products. Investing in distribution expansion, whether that's agency, direct-to-consumer, digital, banks, we will continue to invest. Making sure that we do a great job on servicing, whether the technology-led servicing anywhere, anytime, claim settlement ratios in excess of 92%, renewal rates in excess of 90%. So I think the ingredients to growth, without directly answering your question, and in terms of our investment into those ingredients, including on talent and execution, I believe our objective will be to continuously focus and get better and better into what goes into driving growth. Okay. And results, time will tell. As I stated, our objective will be to grow faster than market. Our purpose is to make sure that every Indian, has the confidence to access quality healthcare.
You spoke about one very important point, that the objective will be to grow faster than the market. FY24, your NEP grew at about 43%, if I'm not wrong. Growing faster than the market, yes, but in the immediate financial year, that is FY25, without pointing one single number, could the growth be higher or at the same levels as far as NEP is concerned as compared to FY24?
So our growth till August, this is publicly available data, in fact till September if I'm not wrong, we've been growing at 30% GWP. And the market has been growing at 18-19% on health insurance. So that gives you a sense of, the difference in growth between us as well as the market as far as the year that's gone by is concerned, Yash.
In the first quarter as well, if FY25 is to be spoken about, your combined ratio again shot up to those 107 levels. Are you confident that second half would be better and you'll be able to end FY25 with sub-100 combined ratio levels?
So I think from a specialist insurer, if you look at global operations, steady state combined ratios that are sub-95 is what plays out globally. And our belief is that in India as well, this is the steady state combined ratios that well-run health insurance operators will achieve over time.
Welcome back. You're still tuned into Midcap Radar. Well, the advanced decline ratio has improved slightly from the morning. However, it's still absolutely in favor of the declines. So for every 465 stocks on the advancing side, we have around 2,000 stocks on the declining side. This is on the NSE. But some broader market movers that I want to point out, Fine Organic, Hormaz mentioned that again, that stock is up 6%. So the chemical space is doing well today. You do have the likes of Sharda Cropchem, which is up 3.5%, Galaxy Surfactants, Deepak Fertilizers, All these stocks are higher in trade today, and this is at a time when the other markets or the other parts of the markets are not doing so well. So watch out for that space. But for now, we'll do one thing. We'll take your leave on this edition of Midcap Radar. Do stay tuned. Closing bell when we return.